over a 2% gain on the Hang Seng.
October jobs report to show us roughly 200,000. It's a beat. 233,000 non-farm payrolls.
You just take a look at all the parameters. The company beat street estimates and its own guidance as well from the second quarter update.
Chasing the gap up may not be a great idea. Buying the dip will be a better idea.
We have got visibility of either proposals in pipeline or one which are sanctioned already, awaiting disbursement.
97 points higher on the Nifty, very strong opening.
Been doing well, and for some time we've had a target of 18,700 on the market.
I think growth is much stronger as compared to what it was a couple of years back.
For our own markets, we're holding up in the green right now as we speak.
We've taken debt for our Ranjangaon expansion, which was a lot of that in dairy.
The World Bank could soon launch a green coalition on green hydrogen.
Point of contention was a 2019 amendment that was ratified by the Parliament. It was called the 103rd Constitutional Amendment. What that effectively did is that introduced a 10% quota for public jobs as well as for public and private educational institutions.
We have the Nifty sitting with cuts of 43 points at the day's low.
Well, that was the day so far. You're with us here on Closing Bell. I'm Prashant. With me, my colleagues Rima and Nigel. Guys, hi, good afternoon.
Afternoon.
I mean, the market is off the highs by quite a bit. But as we begin this edition of Closing Bell, there is a push higher which is coming up. This is exactly similar to what we saw on Friday. The move began at 230. So, you'd call this the 230 factor, but that's what you have. A 0.25%, 18,159 on the index. Now, the market made a high. Today's high on the Nifty was 18,255. But the fact is, for the last 5 or 6 trading sessions, the index has been in this congestion zone. The highs have been around 18,200, although today we pushed higher to 18,255. And the lows have been about 18,000, 17,950 in that zone. And this has been sort of going on now for the last 5 sessions. Like Friday's session, today we broke through some of these levels quickly, but have only retraced. I think you need one strong push higher. What will lead it is anyone's guess. Maybe it's Reliance. Reliance contributed quite a bit on Friday. Maybe it's something else, but you need this one conclusive push which takes it beyond this level, above this 18,300 level, and then the all-time highs of 18,604 come into sharp focus. I mean, something similar on the Bank Nifty as well, which has been consolidating. For the Bank Nifty, I mean, it's just 300, 350 points away from its all-time high. Supports here come in at about 40,819, which is the recent low. Within the bank space, PSU banks are the strongest of the lot. Private banks are kind of taking a backseat. PSU bank index is off 2% from the highs, but even with that, it's up some 4%. So you can sort of see how strong the momentum is. And broader markets are chugging along nicely. The last I checked, you've got 0.4, 0.6% kind of gains coming on both these indices respectively. So it's a pretty okay kind of a market. On the index, I mean, as I said, you just need that one conclusive push to the all-time high levels. Rima, hi.
Hi, and perhaps if the global markets continue to remain stable as they've sort of been, they're showing signs of pushing higher and higher, we will, markets will get that strength to get back to its all-time high levels. Because remember, the journey up until now for the Nifty has been made despite, no support coming in from the global markets. In fact, there was just turmoil in the global markets. But now if things stabilize on the global front, perhaps that will also provide that much-needed last mile impetus. But today, it's the pharma and consumer names which are dragging. So Divi's laboratory post numbers, Asian Paints, Cipla, Sun Pharma, Titan, all of them are weak in trade. It's the banks which continue to fire. The Nifty banking index is up close to about 0.5%. The PSU banking index is up close to about 4% in trade. And look at the outperformance. This is the picture on year-to-date performance so far. The Nifty is up 4%. The PSU banking index is up 46%. But remember, this outperformance of the banking space that we are seeing in 2022 comes on the back of 2 years of underperformance. So banks are playing catch-up. In 2020, banks actually underperformed the Nifty by close to about 17-18%. It was the only index which actually closed in the red. Even in 2021, the gains for the Nifty banking index were 13.5%, practically half of that of the Nifty. So the point we're making is that, the banking outperformance also comes on the back of 2 years of underperformance. So that was a bit of a catch-up, Nigel.
Well, that's right, Rima. In fact, on the PSU banking space, actually many years of underperformance. But this year, 2022 itself, it seems they feel that their time has come. And what you get out there with regard to these PSU banks is valuation comfort in comparison to the private sector names as well. A quick word on the index. Well, earlier today, as the tape just played as we started off the show, the call that we made today was that don't chase the opening. Don't buy the gap up because risk reward may not be favorable. It precisely played out to that script out there. Now, resistance zone, 18,300, 18,350. And I say this because the 18,200 call, just take a look at it. Big open interest built up on that one. And, on the 18,300 call as well, there's a surge in the open interest. And the Nifty is up 55 to 60 points the last time I checked. But the premium on the 18,300 call is lower. That's giving you a clear indication that there is writing out there. So that's why we're referring to those levels of around 18,300 to around 18,350. Once you start seeing some unwinding out there, that's telling you that the bears will be a little bit cautious. For the time being, they are working with that level holding out. Keep in mind that this market is still a buy on dips market. The 17,900 mark, that's crucial on the downside. And then you have the 50 DMA at around 17,550 odd. So it's played out to script till today. Will require a bigger push. As Prashant said, maybe Reliance Industries or a couple of other heavyweights will have to get us to push us above that 17,300, 18,300. Then we'll see a fresh breakout. So just keep an eye on that front. Rima, let's run our viewers through what we have on the show.
Absolutely. So on closing bell today, the key indices have snapped back from the day's low. The Nifty is above that crucial 18,100 mark. Broader markets outperform sectorally. The day belongs to PSU banks. The index surges more than 4%, while it's a down day for pharma sector after dismal Divi's laboratory numbers. A detailed fine print on those numbers coming up on the show. We also place a spotlight on a couple of stocks from the FMCG pack. Marico delivers an inline Q2, while Britannia clocks in strong revenues and record market share. All the details on closing bell today. And two-wheeler maker TVS Motors is under pressure. A detailed analysis from the view from brokerages like CLSA, Macquarie, Nomura, Bank of America. Securities in our special segment, Bull versus Bear, lined up on the show. We'll also get chatting with Nilotpal Sahai of HSBC Global Asset Management to understand the current trends in the market and what lies ahead.
Okay, Mitesh is with us for how he's seeing things. Mitesh, I mean, this is deja vu from Friday, almost a repeat, right? Market sharply moving higher as we speak, 50 points now on the Nifty, 18,170. What would you do?
Yeah. Prashant, yes, I think, the movement is very similar. But the good thing is that, the bank Nifty has kind of held above 41,500 for me. And I think if that remains 41,500, 41,480 zone, if that is not being violated, we didn't have a dip below that. But if that doesn't get taken out and we end the day here, I think that will be some kind of a mild positive pivot breakout on the bank Nifty, and that could propel the Nifty for the next few days. So I think the overall setup is positive, though I think the day was slightly volatile and we did have bouts of profit booking happening. But if you look at the breadth also, I think the positive side clearly takes takes my vote, and I think that's where we are placing our bets. So I have two buy calls right now. We have had buys on metal stocks, Steel Authority and JSW Steel, but Tata Steel is something which has just started moving up. So that's a buy with a stop below 104 for targets of 112. And Apollo Tyres is something which, and tire stocks are also doing very well. Apollo Tyres is something which has also caught my eye. That's a buy with a stop at 292 for targets of 315.
Okay, those were a few technical trading ideas. By the way, the dollar index is pushing lower now. It opened the day above the 111 mark, but right now as we speak, it's 110.5 on the dollar index. If you see the intraday chart, there's a very sharp slide seen in the dollar index. So watch out for that. It shows 110.7, but the updated rate is closer to 110.5. But let's talk about Marico. That's the biggest F&O loser today, reacting to a weak set of earnings. Mangalam is here with the highlights.
But as far as Marico's numbers are concerned this time around, on a reported basis, they were pretty much in line with what the street was working with. And that's primarily because the company had given their second quarter update as well. However, the management did point out some weaknesses as far as some parts of their portfolio are concerned. For Parachute itself, which is a more mass product, they said that the raw material inflation volatility actually caused them to, take multiple price actions, and as a result of which there was scattered product going into the market, etc. And that hasn't settled, and that has only now settled. As far as the other parts of the business are concerned, we did see some recovery in Saffola as far as value added is concerned, we did see a bit of a decline out there as well. But the management was pretty confident with regards to the gross margin expansion continuing into the next quarter and in the next half of this year as well. They're looking at margins between 18 to 19%, notwithstanding the 17% that they've done in the second quarter itself. Importantly, will be crucial to watch out for how the performance of their growth businesses, foods as well as digital, take the company's growth prospects forward going forward, primarily because they have tall targets of almost 850 to 1,000 crores coming in from food by FY24 and almost 450 to 500 coming in from their digital and premium personal care. We spoke with the management and this is what they had to say.
Contrary to expectations, the commodity market, at least as far as Parachute is concerned, continues to fall in a gradual manner, which means that we were always playing catch up with pricing. As a result, our prices have not been able to stabilize in the market. And as you know, that Parachute is a mass distributed brand, therefore it takes 6 to 8 weeks for the prices to stabilize and the price discovery to happen with the consumers. And therefore, we have not been able to get the volumes back, which I believe now is going to happen come around November, December, certainly around December, because now we see the stability happening. If we look at a YOY perspective, I think copra has settled down to a level which is far lower than last year. I think some of the increase that has happened in petro-based products, as I believe is priced in. And also we are seeing a little bit of a marginal decline in other vegetable oils. So having said that, and as you know, last year by Q4, the inflationary conditions are already set in. So if you look at it, I think sequentially we continue to see improvement and we are extremely confident of delivering that 18 to 19% operating margin for the full year.
Okay, that is Marico. Look at some of these rail infrastructure stocks which Nimesh had highlighted earlier on Editor's Roundtable. I mean, RVNL is up 11%. It's up, by the way, 45% for the year, 46% for the year. And that is just, the more talked about. There are about 5 or 6 of these names which are listed. Mitesh, any thoughts on RVNL or anything from that space?
A disclaimer here, I own RailTel, so I think, I recently bought it. I think the long-term charts for most of these stocks have gone up, have improved dramatically, and I think they're suggesting that there could be strong uptrend happening for most of these stocks. But coming back to RVNL, that's a stock also, if you look at the last few days of price movement, there has been a strong rally happening in the stock. And while I think, I have targets of around 65, 68 to begin with, and maybe even higher levels, because this is all-time high levels. So there's no historical supply pivot over here. So that's the extension target of 65 to about 68. So, but I'll not be surprised if the stock even goes higher. The only worry is that the entry could be slightly tricky because you've had 3 days of rally when the stock is moved up by about 25%. So maybe around 47, 48 is a good entry point for the stock with the stop below 43. And 65, 68 remains my first target, though I think the belief is that we'll eventually see much higher levels here.
Okay, all right. Mitesh, fundamentally, some of these tire stocks, they could gains because the gross margins, well, that surprise could still play out. But if you look at these stocks, well, they're flying away. Whether it's Balkrishna Industries, I think we should get an intraday chart out there, or MRF is getting closer to around that 1 lakh mark odd. Have you looked at the charts of either MRF or Balkrishna Industries?
I have, Nigel, I had a buy on on Apollo Tires when we began the show, but MRF is something which is looking very, very interesting. As you rightly said, I think it's heading towards that 1 lakh figure, and that about the stock is at all-time highs, and the setup still suggests that we are not done yet. I think there's clearly a lot of momentum on the indicator setup, and this suggests that we should see much higher levels. If I also work out simple extensions for the target, the last high we got was around 93,900, which was on the 15th of September. And then it declined to about 79,000, so about 14,000 points. That gives you, if you add the same to the breakout level of 93,800, it gives you roughly about 1,07,000, 1,08,000 as the near-term target for the stock. And that I believe, I think the stock should do possibly in the coming few weeks.
Okay, do stay on. Dilip Bhatt, Prabhudas Leeladhar is also with us on the show. Dilip, thank you very much for joining in. It's picking up for the markets at 18,170 as we speak. Sensex clocking in nearly 100 points. Big earnings reaction scene, right? Britannia on the way up, Marico on the way down. Your thoughts on what we saw today? Titan, good numbers, but the stock is under pressure. Valuation's a bit of a concern. The 3 FMCG numbers that were out, your thoughts?
So, well, I think Titan came out with a very rocking numbers without any doubt. I think on all the fronts, the results were pretty much pretty good and pretty decent. Without any doubt, the market expectations continue to be very high, especially for the frontline stocks, and Titan being one of them. So I think maybe the reaction is partly due to the slight over expectation, or maybe just having met the expectations and not exceeded them. But having said that, I think Titan is a stock that one should definitely watch, and one should accumulate at every fall without any doubt, because I think we see that next couple of years, Titan has positioned itself so well, and particularly being in an organized sector, I think it's going to do a lot more in terms of the performance, both in terms of top line as well as in terms of the bottom line. So Titan certainly looks pretty good. And as far as Britannia is concerned, I think a lot of news hovering around the company and the management was probably taking its toll. And the very fact that they have taken a very hefty price increase as compared to on a YOY basis of something like 16 to 18%, I think that also has helped them quite a bit. And going forward, we all expect that the commodity inflation will sober down. And that is where I think we'll see the expansion of margins further for Britannia. So I think that company also looks pretty good. Caveat being out over there that the group as such requires a lot of cash for their airlines operation, and I think that is something which is going to weigh for some more time on this particular company.
Dilip, this entire rail infrastructure stocks and the move, there is RVNL, RailTel, IRCON, IRFC. I don't know if you want to call sort of count IRCTC in that, but you know it's come alive. And how? RVNL, of course, is the leader of the pack. Is this just rotation into what are cheap stocks, or you know this is a strong move backed by sort of capex spending on railways, etc.? What's your sense?
Well, IRCTC, very frankly, we don't think it's really a cheap stock at the moment, because valuation-wise, it's reasonably quite high. But as far as the other stocks are concerned, as what you very rightly pointed out, in anticipation of a good capex and a capital play, I think they are the ones who are really coming into the radar. And of course, all these stocks are reasonably are available at very reasonable levels. But I'm not too sure whether this is going to be momentum or this is a secular long term. I'm not too sure, nor I'm too enthused by some of these companies. I would still prefer to wait and watch, and particularly as their PSs also, there are a lot of uncertainties and volatility surrounding them.
Okay, all right. Hi, Dilip. Request you to stay on with us for the time being. Let's hop across to Sonia. Well, she's joining in with a couple of brokerages on TVS Motors. Couple of them, Sonia, they're revving up the axle out there and revving up the engine, while CLSA, I think, is putting the brakes on it. Tell us more.
Absolutely. There's a bull and bear case argument on TVS Motor, and I just wanted to put that forth for our viewers. On the bull case, you have Nomura, there's UBS and Macquarie. Nomura has in fact upgraded TVS to a buy. They've raised their target price to 1382. UBS has a buy with a target price of 1355, and Macquarie has an outperform. They've raised their target price to 1260. Now the reasons are well known. The success of the new models, you've had a very good response to the new electric vehicle iQube. Margin tailwinds are the big positives. Nomura says that export challenges are likely in short term, but the TVS group will definitely outperform. Now, on the bear side, you have CLSA that has a sell with a target price of 932. They believe that the valuations are very expensive after the big run-up that we've seen in the stock. The stock is now trading at 30 times FY24 EPS. BofA Securities has downgraded to an underperform. They have a target price of 1030. Once again, they reiterate that valuations have no room for error at all. Also, the weakness in exports continues to be a bit of a concern. In the EV business, although the business is doing well, initially there will be losses which, you know, you'll have to sort of factor into the P&L. and there is competition risk as well. Competition is coming back aggressively in the electric vehicle space with Ola back at 20% market share. Honda is having a new EV launch next year, and macro headwinds in Africa will continue to drag the market. So there are equal cases for both a bull and a bear. You can take your pick.
Okay, all right, Sonia, thanks a lot for that. Well, Dilip, which side are you leaning forward to? TVS Motors clearly has been the big outperformer. I recall the margins of 7 to 8%. Sonia used to tell us it's hoping to get to double digits. They've got to double digits. The problem now is that, valuation-wise, it's not cheap. Your take on the stock?
Certainly. I think, Nigel, I think what I would think is that the sector as a whole is still under a shadow. And whether you take the leaders, Hero Motorcycles or even Bajaj, I think they are also under a shadow. And the sales of two-wheelers particularly has been very tentative. So without any doubt, TVS has outperformed. But at 30 times odd, something like 24, I don't think that it's very cheap. And unless until you're a leader in that sector and you're outperforming, then it's a different story. But not being a leader and to chase the stock, not to say that TVS is, of course, considered to be one of the best management in the country today. But having said that, I would still not be in a hurry to buy TVS Motors from the current level. I would prefer to wait and watch. At best, I think I would still look for some more fall to come before I think I could think about, before I could decide to buy on this.
Dilip, great getting your views in. Thank you very much for joining in. Markets are ticking higher. Big boy Reliance Industries is now contributing. That's up close to about 0.5%. HDFC Bank has inched up to about a 0.8% gain. ONGC is following the bit of an up move that we are seeing in crude prices as well. So ONGC is now at the high point of the day. We'll get into a break on that note. On the other side, we'll get chatting with Nilotpal Sahai of HSBC Global Asset Management. Welcome back. Divi's Laboratories has tanked 8.5% after reporting margins at multi-quarter lows. Ekta is here with the details and what went wrong with Divi's this time. Ekta.
Thanks for that. Well, yes, for Divi's Labs, it has been a complete disappointment. The street was anticipating a revenue, a revenue growth of around 10 to 11 odd %. It reported a decline of around 7 odd %. The margins have come in at multi-quarter lows this quarter, and that has really disappointed the street at around 33 to 34%. The street was anticipating at least some stability as compared to the previous quarter, where it reported margins of around 37 to 38%. All of this resulted in a profit decline this quarter, missing estimates as well. Now, a couple of key important takeaways. The company does have its investor call on, and a couple of analysts have shared a couple of important takeaways. The margins were impacted by raw material pressures this quarter. It was impacted by some delay in projects this time round, but they are quite optimistic about the custom synthesis business picking up in the coming quarters, and in the next 4 to 6 quarters, they should probably see an increase in terms of orders in the custom synthesis business, which could probably result in terms of some improvement of margins. Now, the demand was hit because of a product mix, because of delay in some projects, as well as obviously one of the big COVID-19 related opportunities not being there, something that they had already guided the markets for. But they seem to be very optimistic about the custom synthesis business going forward. They are talking about how there are opportunities which they see fructifying probably in the next couple of months. They are optimistic about growth in the custom synthesis business, and that is something which should probably bode well in the future. But remember that the street wants it delivered in terms of execution and in terms of numbers, and that's probably why you're not seeing any sort of respite despite the optimism from the management.
All right, Ekta, thank you very much. I mean, for now, the market is not responding to what Ekta described as sort of positive commentary on a specific line of business. Nilotpal Sahai is Head of Equities and Fund Manager at HSBC Global Asset Management. Thanks very much, Nilotpal. Great to have you back on the program. I don't know if you have any views on Divi's, which of course is one of the highest quality companies in that sector. It's a long-term sort of wealth compounder. But having troubles lately. As Ekta pointed out, earnings missed some 30 I'm talking about operating profits, missed some 30% as compared to estimates. Revenue growth was negative. What's your sense? I don't know if you own it, but if you have a view, please do share it with us.
I would be hard pressed to comment on a particular company, in fact, I would be commenting on in this particular case as well. But the point that I guess Ekta was making is that the raw materials prices has been one of the factors. So that's something that what we had seen in some other names also, and in case of chemical, which is the further upstream set of companies as well. The second point was also relevant in this case is that the volume growth which was coming on account of certain product in the previous quarter is missing in this quarter. So at the operating level also there might be a concern, but I have not seen the numbers and I wouldn't be commenting any further on this.
Nilotpal, afternoon. This is Rima here. Banks has been the consensus buy trade and the earnings are delivering to street expectations. The stocks are getting rewarded. Is it too late to get onto the bank's bandwagon right now? Do you think the stocks have already priced in a good portion of the expected earnings recovery from here on, or do you think there's still a lot of upside left?
Yeah, thanks, Rima. So we have been holding a positive view on the banks for quite some time. And initially, the key reasons for the positive view was on account of the fact that initially, in the initial part of the pandemic, there was a fear of huge loan losses, and the banks made significantly high provisions on account of that. Actual loan losses were significantly lower than what was initially expected, and as a result of which the credit cost in the subsequent quarters, last 6 to 8 quarters, has been declining, normalizing, let me say. But at this point of time, they are at decadal lows. So that is on the positive side. But from here onwards, one should expect the credit cost to actually begin to inch up to go back to the normal levels. But what has also happened in the last 12 months or so, that the credit growth has picked up after remaining subdued for almost 2 years, and now they are at robust levels, higher than the money supply in the system, and so reasonably doing well. In this quarter, we have also seen margin expansion. Now, we do reckon that a part of this margin expansion, NIM expansion that we saw in this quarter would get reversed in subsequent quarter, and that would be largely on account of the fact if the deposit mobilization competition heats up. And in this quarter, what might have happened is that the advances would have got repriced earlier than the deposit, and the margin benefit has come. Now, to answer to your question whether it's too late or not, I believe still there is a lot of steam left in the banking sector, and because the growth is still coming, the earnings growth is still robust, and this should be a key overweight. Now, having said that, the stock selection should be based on the couple of things. Because the credit growth is more or less coming, so the real differentiation will come from the fact that which are the banks which are able to mobilize deposit and at a lower cost. So that should be one key differentiation. The second one should be how adequate is their capital position, because that will determine for how longer the growth can continue. And thirdly, there are still some banks where the credit costs are still at elevated level, and that can come down, but those are more like exception. So those could be the exceptional cases and addition. So if one is selective, one will still make money in the banks and financial sector from here onwards.
All right. Hi, Nilotpal. You know, the second quarter for cement should have been a washout, and it's a washout more or less. You know, a couple of companies delivering inline set of numbers, a couple of them beating as well, but majority of the street missed estimates. You've been positive on cement, I think so. What's your view right now, and what would be your preference? Would you go for the larger cap names because they are likely to get larger from here on, or do you believe you go for the smaller ones that now have some valuation comfort?
Yeah, thanks, Nigel. Yeah, we have a positive view on cement, and that is largely because the washout quarter that you mentioned was largely known, that this was, like I mentioned about the banks, that all the factors were working in favor. Here, the dispatches were weaker, the realizations were also lower, and the cost has gone high. So everything which could go wrong had gone wrong in this quarter. So that was the known part. But from here onwards, if one actually looks at, and since we also have got a positive view on the capex overall, so the demand for the cement is reasonably strong going forward. That's number one. Number two, we do believe that these margins are absolutely at the bottom level and they have to expand from here and expand meaningfully. We have also seen moderation in the pet coke prices and some of these energy prices, which will help the fuel cost and as well as freight cost moderation in case of cement companies. That will also benefit. So the outlook is better for the cement companies from what we have seen, and significantly better. It could be like one of the few cases where the third quarter is better than second quarter in terms of profitability, not something that what we have seen in the past. Having said that, the selection criteria within the sector should be predominantly, our view is the large caps, because we are seeing that consolidation is happening, and in that case, there would be a profit pool would migrate towards the consolidated players at the top, and we would prefer the large cap names within the cement pack.
What about commodities? Steel stocks have been moving up. There is a lot of hope about China reopening. The Chinese stocks have already started reacting, the Chinese markets. Is that a theme one should look at?
We have a negative view on the commodities, especially global cyclicals, and precisely for the reason that you mentioned, that a lot depends upon what is happening in China and elsewhere, on which we have got no control. Sometimes we do hear things opening up, sometimes, but there has been their zero COVID policy has ensured that the lockdowns have remained for quite some time. And since there is a lot of uncertainty about the growth angle in China as well, and a lot depends upon their policy making. So that makes it actually a little bit unsure about forecasting profitability from this sector. And that is what is keeping us away from the global cyclicals in the past. And also, more near-term reasons actually also has been that till very recently, we were looking at the peak prices. For obviously, the corrections, some corrections have happened, but still they are higher than what the historical averages has been, despite the correction. So we do think that the global cyclical could correct some bit further to go back to the medium to long-term averages. We would be staying away largely from that sector.
85 points on the Nifty now, just absolutely a ripper of a day. And this is, you know, as saying this, almost an exact replica of Friday. The move on Friday started at 2:30. And we ended the way we did. And today also, basically at 2:30, the move started, and we are up 85 points, which means from the day's high, we're about 50 odd points away from the Nifty. Where is the push coming from? It's banks. So the PSU bank space was doing well. Private banks not so much, but the private bank space is doing well now. ICICI Bank, if you can have the intraday up, is contributing some 16, 17 index points. Reliance is back in the mix. I mean, intradays will, I guess, tell you the story if this has happened in the last hour. ICICI Bank, yes, I think that mirrors what's happening on the Nifty. Reliance as well, maybe a little bit help from Reliance, like what we saw on Friday. HDFC Bank is the other one, which we should put up some 12 index points coming from there. And HDFC Limited also with about an 8 index odd point move. So these are sharp moves in the last 30, 40 odd minutes or so of trade, and the index is kind of flying away and doing very, very well. Nirotpal, we'll leave it there. Thank you very much for your time. Good speaking with you as always here on CNBC TV18. We'll take a quick commercial break here as well. We'll come back and get you a quick check on what's happening in dealing rooms on D Street Chatter. Buy today, sell tomorrow trades with our technical experts coming up. Stay with us.
Welcome back. Well, the Nifty is at around that 18,200 odd mark, and that means that the Nifty Bank is the one that's taking us higher. Nifty Bank and Reliance Industries as well showed some traction. Keep in mind, now after this big move that we're seeing on the Nifty Bank, we're only 0.5% away from fresh all-time highs on the Nifty Bank. Let's see whether or not we get that final push out there. But for the time being, let's hop across to Nimesh. He's joining us. Hi, Nimesh. What are you picking up? Flows are strong. The FIs, they have been showing us a lot of love, a lot of money in the last few days. Expecting that to continue?
Expected that to continue, but may not be that large. Even on Friday, that was a feedback that they are buyers, but they are not large buyers. That seems to be the case today as well. So the flows are mixed. There is a bit of profit booking as well. And remember, there are a lot of stocks which are reacting to earnings as well. So there is a bit of that flows as well, which is impacting many of those large cap stocks. Again, a day of consolidation. We've been saying that there is a room for markets to go up above 18,300. There will be a clear breakout, so that's the level to watch out. But before that, you'll see some bit of consolidation. That's normally the trend, and that's playing out in today's trade. As I said, the flows are mixed, so there is a bit of profit booking as well in some select names. But the rally is clearly led by the PSU banks. That seems to be the big flavor of the day in terms of buying interest as well. The other sector which has done remarkably well today are the tire stocks. Yes. We saw some move in the auto ancillaries. Now I guess it's a time for the tire companies to do well. So the entire pack is doing good today. Apollo Tires is doing good. MRF, Balkrishna Tires, all are buzzing in trade today, and they're well bid as well. So there is a bit of interest back in that particular space from the larger institutions. As I said, that's been the trend of this earnings season. We are seeing a lot of sharp reactions to the earnings. The top, if you look at the top two winners and gainers today, both are because of the sharp reactions to the earnings. So that's clearly playing out in many of those names. But a day of consolidation with a positive bias. The FIs are positive, but there is a bit of profit booking as well. So it's a mix in terms of flows. PSU banks and tire stocks are where there is a lot of interest, but there is profit booking as well in some of the large cap names.
Well, that's right, Nimesh. The outsized reaction that you're getting, Britannia, well, the numbers are good. The management commentary was even better, so stock is up 9%. Divi's, the numbers are weak, and the management commentary is strong. Then, but the street is saying that we heard it the last couple of quarters. Yes. Now we want to see delivery because the management sounded extremely positive on the call. But individual stocks, what are you picking up?
Okay, so in terms of individual names, the first stock is Intellect Design. That stock, if you see Y2D, that stock is on 40%. And today there were a couple of blocks. One happened in the pre-open and one happened around 12 o'clock. And I believe it was a clean-out trade from one of the leading AIF. And in terms of buyers, a couple of large HNI seems to be buyer in Intellect Design. So that's a stock to watch purely from a delivery point of view, as well as the fact that selling pressure from a leading AIF is out of the way now. So that's the first one. The second stock is Restaurant Brand Asia. That's the company which owns, Burger King. And again, that stock has been consolidating off late. But now I believe there's going to be a large corporate development soon. The indication is that maybe they're going to acquire something, and that's pretty much on the cards. So that's the reason why this stock should be in focus. The third stock is Polycab India. Again, good stock, been consolidating. Every now and then there is a buzz of a large block deal. Looks like now that the earnings are over, that block can come very soon. So that's something to watch out for. And the last stock is Piramal Pharma. I picked up this stock largely because there is a lot of trading interest as well now in Piramal Pharma. Remember last week when there was a MSCI selling, a lot of large HNIs bought into this stock. But today the stock is under pressure, largely on back of a large selling pressure from a leading FII. So the delivery volumes are going to be quite high. And today's underperformance is largely because there is a large supply coming in from a leading FII in Piramal Pharma.
For that interesting chatter there, Mitesh Thakkar is back with us. He's going to tell us what you can buy today or sell today for a reverse trade tomorrow. Mitesh?
Yeah. So I have a BTST on Oracle Financial. I think that's moving up and now showing signs of getting into some kind of uptrend. Take a stop below 3,000 or 29.95 over here. Look for a target of around 30.70 on the upside. And the other stock which I like is Mindtree, both of them from the IT pack. This is a BTST with a stop at about 34.90 for targets of 35.45.
Okay, the other stock which is on our radar right now is InterGlobe Aviation, which reported a mixed bag of earnings. Revenue growth was strong at 121%, but margins came under pressure. Here is a word from the CEO on the performance and their expansion plans.
Take a little look forward. We continue our capacity expansion and our network expansion in the third and the fourth quarter going forward. Actually, in the second quarter, we have inaugurated our 100th destination. We continue to expand that network, and we expect to end this year in some 13 to 70% capacity levels higher than the pre-COVID situation. Clearly, demand, as we have seen, remains to be very strong, and that's also why we're taking a lot of measures in order to meet with this increasing demand. Clearly, our priority so far has been restoring the network. If we see where we are today, we made a loss if we exclude it from foreign exchange, and if we were to exclude from the enormous increase in the fuel prices, we would have definitely in a much better spot. And if you see where we are today with travel numbers basically hitting 7% higher than the situation prior to COVID, with load factors in the quarter, which is seasonally weak, around the 80%, and with a yield which is normally in this quarter going down by 10% as compared to the previous quarter. It's now running at the just a 3% lower level. So if you take all these elements together, we see a very solid market development. But obviously, the price of fuel and these rate of exchange, as we just alluded on, had a negative effect.
All right, InterGlobe, I mean, numbers, of course. There was a loss. Adjusted for the Forex item, the loss was smaller. Stock was sharply lower, recovered, and now down once again, 1777 on that one. Now, soda ash prices are coming off after being on an up and up kind of a trajectory for many months. Tata Chemicals and GHCL are the two plays there. GHCL, of course, pure play soda ash. Tata Chemicals soda ash is an important constituent. Sonal is here with more. Sonal, over to you.
Thanks a lot for that. Well, GHCL and Tata Chemicals, they'll be in focus because soda ash prices, they have been cut for the first time since 18 months. And it is important for these two companies because they are one of the two of the major producers in the country. Now, soda ash prices, they have been cut by 4% from 37,500 rupees per ton to 36,000 rupees per ton. Yes, it is not a big decline that we've seen, but it is start of a cycle where we are seeing softening of soda ash prices. Now, remember, these prices, they went up almost doubled in last 1 year from 20,500 rupees per ton in June 2021 to levels of 37,500 rupees per ton in June 2022 itself. Now, GHCL in its conference call and conversation to us had indicated that yes, soda ash prices could see some softening going ahead because of some supply coming into the market. From here on, apart from these prices, energy prices are also key to track because if energy prices, they come down, then soda ash prices will remain at current levels. But for now, first signs of softening of soda ash prices, and these two stocks will be in focus on the back of that.
Okay, all right. Thanks a lot for that, Sonal. Well, Mayuresh Joshi, Head of Equity Research at William O'Neill, joins in. Hi, Mayuresh. Good afternoon. What do you make of this piece of news? You know, soda ash prices finally, after being strong, finally seeing some bit of a U-turn. If you have a view on the producers or you have a view on a couple of these consumers, Nalco, for example, you know, aluminium companies, they as well consume soda ash among other industries. Your take?
Afternoon, Nigel. No, absolutely. I think it was in a cycle of its own. And as Sonal pointed out, I think the pricing was very much in favor of producers over the last few quarters. Now, with expectations in terms of demand softening, we've obviously heard a bit from the Tata Chemical commentary as well when it comes to its European operations, with the kind of demand trends that are expected to go down, and the rest of the globe probably softening in terms of demand as well. Commodity prices will soften off from the peaks that you've probably seen. So I think a major component for Tata Chem and GHCL, as Sonal was pointing out, does come from soda ash. The interesting element, Nigel, here is that the inventory levels for soda ash are expected to be still in a deficit. So I think it's just the expectations of the next few months where prices actually start correcting in terms of demand-supply dynamics. But at the end, as you rightly pointed out, I think user industries like detergents, solar glass manufacturers, I think you've got a reasonable amount of market share that these producers can probably cater to, and demand can come back with a bang. But with demand softening, with the expectations in terms of prices coming off, with demand coming off as well, I think the obvious reaction in terms of both the EBITDA reported on this particular segment, which is quite significant for both these companies in particular, I think would probably start taking a tad bit of a hit on a quarter-on-quarter basis. So yeah, I think a key pivot level for Tata Chemicals, I think we do hold that as a disclaimer in our global focus lists. 1150 is very, very key for Tata Chemicals to take out, to probably have the momentum continue. Otherwise, I think it might be a sideways move or probably a time-wise correction for both these stocks.
Any thoughts on Vedanta and what's going on today? The stock is down 4.5%, very large turnover compared to what it typically sees. What's spooked the street? I know on Friday it did well, but anything that you've picked up today on Vedanta?
Afternoon, I know nothing in particular. But again, I think it's a typical cycle for metal companies in general. I think what probably happens with the dollar index at this point of time, I think is going to clearly play a pivotal role. But why the stock has tanked with a good move on Friday, I think I have no clue, frankly, at this point of time.
Okay. Mayuresh, hi. Good afternoon. Will the PSU bank move give more, yield more? Or do you think now it's time to get a little cautious, purely from a trading perspective?
So Prashant, afternoon. I think the move has been phenomenal over the last few weeks. And quite a few stocks came on our market split radar, including the likes of the State Bank, Bank of Baroda, of India, and even an Indian bank from lower levels as well. So I think a large part of the move, if you frankly ask me, is gestated in the price. But I think key pivot levels on the O'Neill methodology have been taken out. So SBI, as an example, I think the key pivot levels have been taken out after the big move that we probably saw today. But largely, I think the kind of numbers that these banks are posting and the commentary that is probably coming through. You look at the asset quality, asset quality pressures have come off quite significantly over the last few quarters. Loan growth has been stupendous. I still remember reading an article a few days back where I think because of lesser liquidity in the system, a lot of banks are obviously opting out for CDs within the system itself. Yes, there will be a repricing in terms of demand deposits as well. And therefore, I think the management commentary in terms of NIMs probably staying in the range of the next few quarters is going to be key. For a few of these PSU banks, Prashant, specifically the mid-tier ones, I think if the loan growth continues the way it is, I think capital raising should be an option that will come through. And because of that, even SBI's numbers, I think, have been phenomenal. But I think on two counts, it still needs a little bit of more perspective. I think the demand growth or the deposit growth has been just 9 or 10 odd percent. And therefore, with rates hiking up, what kind of impact that will have on NIMs? And the capital adequacy stays around 9.53. So at some stage, they will have to come in for the market for some kind of an equity raise, and therefore dilution in terms of the overall equity base that they probably carry. No doubt, I think the banks have done phenomenally well, but I will probably wait for some pullbacks on stock like State Bank, even an Indian bank. But these mid-cap private banks also should be kept an eye on. Banks like Federal Bank have posted a brilliant set of numbers, and the commentary has been very big.
Would buy even the smaller private sector banks on pullbacks, or even at current levels, it's good to buy right now? Say a Federal Bank, which you referred to.
So ICICI looks very, very good, Rima, at this point of time. It's around 3% off to the pivot. So I think a 3% move on ICICI Bank would get it very, very close to the pivot as we track it at O'Neill. So that would ensure that a lot of supply probably is gestated. Numbers have been phenomenal for the bank as well. And generally, I think we probably stick with leaders as per our mechanism as well. So on the larger names, obviously ICICI, something like a Federal, banks like an Indian, Bank of Baroda, on pullbacks towards the nearest moving averages. And even State Bank, a little bit of a pullback and a consolidation would be key in terms of an entry points.
500 points on the Nifty bank. That's what's taking the Nifty higher. It's going to be a good close, actually, because we started off at around 18,255 odd. Then we slid down to around 18,110. And now, in fact, we're holding at around 18,220 odd. Pretty good move is what we've seen on the index. Well, Mayuresh, I wanted to ask you about one theme. That's the hospital theme. A couple of these stocks have come off the high point. You had Rainbow Hospitals as a pediatric hospital, which did pretty well. But what's your sense? I think your house view, you'll have done a fair bit of research on hospitals. Which stock do you like from there?
Yeah, so I think it's a very interesting space, Nigel. And whether we like to say it or not, I think in a recession environment or softening environment, this should hold up. So I think one of the stocks as a disclaimer that we like is Max Healthcare. If you probably put out the statistics in terms of stacking up on top line growth, in terms of return ratios, in terms of the average revenue per operating bed, the length of stay, and therefore I think the kind of numbers that Max Health has put out consistently, and even the past quarters numbers that have just come through, have been very, very good in our opinion. The average revenue per bed on an annualized basis is phenomenal. What you're probably looking in terms of extension of further beds with an asset-light model. They've got certain capacities to be added across their hospital chains, including the one at Manavati in Mumbai as well. And therefore, I think the kind of numbers that they're posting is a testimony in terms of their EPS growth, and that clearly reflects on the EPS ranking at MarketSmith as well. And therefore, I think the ROEs that this company reports has been exceptional. The other stocks also are attractively placed, but in our opinion, at this point of time and juncture of the market, Max Health probably remains a stock pick with a clear disclaimer that the recommendation has been given out to clients. Clients may have holdings in stocks.
Any thoughts on names like Amara Raja, which is, I mean, even now after the massive move we've seen in the last two sessions, it's 600 or so basically right now. And the high was early 2021 high was 1,050 or so. But has anything changed here in names like this, or is this the market finding, some of these beaten down names and bidding them up? Are there reasons backing some of these moves up, in your opinion?
So, Prashant, I think it's a mix of both, right? I think any announcement that probably happens with the EV part, and in the quarter one numbers itself, they had announced the plans to probably have the lithium-ion plant going through. So again, I think the capex that they're expected to do over the next few quarters for this plant specifically would probably give them an edge. And it's not just Amara Raja. I think you probably look at Amara Raja and Exide, very few pointers of differentiation, very close and similar to margins around 10 and 12% kind of a band. Balance sheet from a debt perspective or a leverage perspective is very minimal for both these companies, or actually negligible for both of them. Both are probably expected to put up their plants as well. The exposure that they've probably got, obviously Exide has a larger pie in terms of leadership when it comes to market share, both for PVs and two-wheelers as well. But Amara Raja does have a significant leadership positions in both UPS and the tower business as well. So very clear, very indifferent points of differentiation between these two companies. But I think it's more to do in terms of them probably expected to do well in this current scenario of the combustion engine batteries and foraying into the e-batteries as well, which probably will then ensure that these players, with the kind of capacities and distribution network that they've got, take a lion's share in the Indian market itself as these capacities come on board and EV actually takes off over the next few years. So I think some tailwinds for both these stocks very clearly, both Amara and
All right, Mayuresh. So tailwinds there, market choosing to recognize some of that stuff now. Appreciate you joining in, Mayuresh. Have a good holiday tomorrow. And of course, we'll see you back soon again. Thanks indeed. Well, I think we're going to start wrapping up things. The market is going to go home with not quite a three-digit gain, but quite close as well. 95 points higher, 18,214. Banks, of course, were the sort of big reason why that happened. The PSU bank space was doing well, but what happened is that the private banks came together and did well. So the Bank Nifty, by the way, is not very far away from its all-time high, but neither is the Nifty for that matter. It was a day which was, in a way, all about results. On the Nifty, outside the Nifty, wherever you look, you had big movers like Britannia, State Bank of India, Bank of Baroda, which moved higher on results. And, some of the biggest losers today were also suffering because of earnings. I'm talking about Divi's Laboratories and Marico. But beyond that, beyond earnings, lots of thematic moves as well. PSU banks outside of SBI and BOB moved, rail infrastructure stocks and so much more, broader markets. Rima.
Indeed. So just pull up something like an RVNL or RailTel. These stocks saw some big up moves today, and banking. Mid-cap banks were on fire. Dhanalakshmi Bank spiked up towards the close of trade. That was up close to about 15%. But even across the board, you had some big moves. Union Bank was up close to about 6.5%. Amara Raja is another stock which saw pretty good volume. Stock gained close to about 6.5% in trade. On the losing side, Marico was under pressure. Birla Soft was down close to about 1.5%. It's got a new CEO. You got weakness in India Bulls Real Estate, and Vedanta also slipped close to about 5% on large volumes, right?
Well, that's right. From the broader markets, though, plenty of stocks had quite a lot of traction. Smaller names, Vasco Engineering came out with a set of numbers. It appears the street likes it just a few minutes ago. So that stock ended higher. You had Jyoti Structures that was higher, numbers in the next few days. Lesser known names is what we're talking about. NIIT post that acquisition, the street liked that. That was up 12.5% in trade. RVNL, D-Link, all those stocks, they did pretty well. All in all, it was a solid trading session with the Nifty pulling back substantially from the low point of the day. We land shy of that 18,200 odd because of the averaging that will take place. The Nifty Bank, the start and trade up 450 points, but the mid-cap index up 0.8%. Way more stocks advancing in comparison to the number of stocks that are declining. Well, we'll wrap up on this edition of Closing Bell, but you stay with us because Commodity Champions comes up next.
Powered by LIC, हर पल आपके साथ।